Hi everyone, we are group 10. Our group has 6 members. They are Tuyet, Hoang, Pham Nam Long, Huong Giang, Minh, Khoa, and me. Today we will discuss about the case study of WeWork. First, I will talk about the overview of WeWork, how WeWork spiraled from a 47 billion valuation to talk of bankruptcy in just 6 weeks. WeWork is an American commercial real estate company that provides shared workspace for technology startups and service for other enterprises. Founded in 2010, it is headquartered in New York City, and as of 2018, it's managed over 4 million square meters. So how that empire has experienced such a catastrophic recession, prompting to the case that its co-founder Adam Neumann lost his billionaire status, will be cleared up in this performance. The first problem of WeWork is the financial risk of its business model. WeWork's business model requires a huge amount of money and investment for leasings and renovations. In addition, the renters are mostly startups, which is in itself risky. However, WeWork defines itself as a technology company instead of commercial real estate, which means it wants a technology valuation with the vision of creating a community and the promise of potential growth and expansion. WeWork did successfully convince many investors, which grew its valuation more and more. When WeWork is founded, it raised $15 million when evaluated at $45 million, which is tremendous for a startup. In 2016, WeWork increased its valuation up to $16 billion with investment from JP Morgan, Goldman Sachs, benchmark in the wave of commercial real estate investment post-2008 crisis. In 2017, Son Masayoshi signed a check of $4 billion to Adam through Vision Fund. So while one of the most valuable startups has vanished in price in such a short period of time, the main problem is that WeWork had a lot of money coming in from investors, but it doesn't know how to utilize it correctly. And all the problems have been revealed since WeWork submitted for the IPO. After having been blown up to 47 billion, WeWork valuation was reduced under 5 billion. The document shows the crack of managing investments and the real financial situation of the company. First, let's talk about the investment management of the CEO Adam Neumann, or how WeWork spent its money. From a co-working service provider to the We company, WeWork has expanded to several sectors. It started with a WeLive, which offers apartments for rent. It also invested in a wave pool startup, launched a fitness brand, acquired a coding academy, partnered with Airbnb, bought Meetup, and many young startups. Moreover, there are many problems around the financial management of the CEO Adam Neumann. First, Adam mortgaged WeWork stock to borrow $500 million to buy more lands for lease. The funny thing was, WeWork itself was the one leased those recently bought lands. The second thing is that Adam approved to spend $60 million from the company on a private jet. Third, Adam cashed out $500 million prior to the IPO. Fourth, if he weren't the WeWork CEO anymore, his wife would have the right to choose the successor. Finally, Adam has personally purchased the trademark to the word "we" and sold that back to his own company for $5.9 million. With all the investment had been made above, Everyone was wondering about the company's financial situation. Let's take a look at the financial statements of the company in the IPO file. In 2016, WeWork gained $436 million as revenue but had a net loss of $429 million. In 2018, the revenue was $1.8 billion, but the net loss was $1.9 billion. Growing revenue and growing loss. This chart shows WeWork's revenue in blue and its losses in red. It is obvious that WeWork's losses are growing over time, and some losses are scaling faster than revenue, up to 200% of its revenue. Cash flow was positive in the first 2 years, but negative in the recent periods. Its business model required WeWork to charge a huge money on non-cancelable operating lease commitments. In 2019, the amount was $4 billion and predicted to be $39 billion in 2024. That's too much for a company which has a revenue of only $1.8 billion per year and it isn't profitable. So now I will jump to the conclusion. As all above mentioned events, we can see that the life cycle of WeWork goes through the volatile behaviors with ups and downs. The company failing to go public in 2019 made it face intense scrutiny by investors and the media with concerns about WeWork's past profitability and the behavior of its leader, Nguyen. In addition, investor withdrawal intention and the COVID-19 pandemic's economic effects are real threats to WeWork, coupled with the fact that it has come under fire for trying to branch out to North America, which is plagued by pandemic. If WeWork wants to exist in 2020, its executive team has to commit to the fact that it cannot exist as it did in 2019. That business is going to die. It's simply a question of whether the company chooses to kill it and build something from the remains or walk away from whatever's left. Costs must be cut, office shutter, layoff made, price raise, side business sunset, so that the company can become what it has to be to actually survive.